Hey everyone, Nick Shaheen here, trying to demystify, or at least put my sense into the banks and the latest rhetoric. So I watch CNBC about 10 minutes a day. Sometimes I don't last the 10 minutes. There are some good people on there, but in general, there's a lot of hogwash coming out of there. So let's talk about the recent meme. Everybody loves banks now, and everybody's chasing banks. Disclosure, I shorted JPMorgan on this pop. I didn't catch the exact top, but I did catch enough that I have greens. I had reds, I didn't fold. I added some, and now I have green. It's not a big position, it's just a simple puts for December. And I will have a tight stop if they prove me wrong. So here's the logic. So people say, it's going to get a little loopy and wonky, but I'm going to make it as easy as possible. There's something called TINA, that there is no alternative. Basically, there's a huge sum of money in the world that does not want to risk money in stocks, right? Well, they have nowhere to go anymore because all the central banks, our Fed, the ECB, China, everywhere, Japan, everywhere, there's no reward for fixed income. So they're pushing this money into riskier assets. First, they come into the US bonds because we still pay almost 1% on the 10-year, for example. So 1% is better than their cost. So if in Europe they want to buy bonds, they have to pay extra. They lend the government money and the government says, please give me gas money so I can come and pick it up. It's ridiculous. So they have to buy US bonds. So there's a bid under the US bonds. So if there's a bid under the US bonds represented by the TLT, the ETF, then the TNX, TBT, all the ETFs that track yields cannot rally because they're inversely related. So if you're bidding in bonds and bonds had support so it can easier rally than fall, then there's a limit to the yields. And now everybody's convinced that the yields are going to the moon. Technically, I kind of agree. I set out a trigger to trade the yields higher a few weeks ago because I saw the baseline in the TBT and the TNX. And I said, you know what? It looks like it's basing on the long term and it's going to rally. So got long early. But now it's late in this meme. And look what JP Morgan did not too long ago. I don't remember what happened in June, but I can guarantee you is the fact that, oh, yields are coming back. So let's test this. I'm going to show you the TLT, which is representation of bonds. And they should be inversely related if everybody's right, which means that JP Morgan banks, they like the TLT to fall so they can rally, right? So the TLT is the bond price, so that's inversely related, goes the opposite way of yields, rates. And that's what's happening. Rates are rallying, the TNX is almost 1, and now everybody loves the banks. So where were they down here? Where were they down here? This is when I said get long the hated banks, the most hated bank, Wells Fargo, get long that. Citigroup, get long that. This is not where I'd get long banks. This is where I book my profits, and I would get long some other stocks because I agree the stock market can go higher. I don't agree that it's the banks that are going to lead it. In fact, they're the ones that are going to swim upstream more than anything else because they have TINA. So TINA, that there is no alternative, helps this guy, the bonds, prices. It also helps stocks like big money that doesn't want just 1%, will buy good stocks that are rallying. So if they can get a return of 15, 20%, they're good to lose on a few other ones. And that's almost as guaranteed as anything because these stocks are good, like Apple, Google, and all of that, and they pay dividend on top of it. Why should they park in something that hasn't been able to rally for years? So TINA does not help the banks. In fact, it works against them because it helps the anti-banks. This is the TLT. TINA helps the TLT. That's no doubt about it. That's where it came from. There is no alternative to buying U.S. banks, U.S. bonds. So that is the TINA part. And then they extended it to the, hey, you know what? It also helps stocks. Well, if it helps stocks, it can't be all stocks because it also helps the bonds. So therein lies the catch-22 for these guys. So this is bond prices. So the yields goes exactly the opposite of this. So let's put the yields in. And the TBT will show you the yield. I think that's the cleanest look on that. So the TBT would look like JP Morgan and would look exactly the opposite of the TLT. You see how it works against each other? So if I was a betting man, and I was, and I put my money where my mouth is, I bought puts in JPMorgan, and I'll manage them for the next couple of days, and it's not a massive, it's just to make the point. First of all, this was a massive failed zone before, and they're fighting over it right now. Second of all, there's this cluster here that I don't like, and it's regression, reverting to the mean. It's more likely than not. So I'm going to go to a 60-minute chart. So now we're talking JPMorgan. So I think I shorted it somewhere here, and I would stop myself out above this zone. So I don't need to pick a fight with them. If I think they're cheap. I just think that their upside is not as easy as everybody makes it out to be. So I don't want people to get suckered into it, not knowing the whole story. These are never a good setup for more upside, especially in banks. I can see Neo doing this stuff, but why banks? Neo didn't even do that. So XLF, I heard something from CNBC, oddly enough, yesterday that the XLF spike rally the day of Monday was the biggest rally since 2008. And get this, when it was illegal to short them. So there were no sell bids, basically. And this news is that good? I don't think so. Anyway, my 2 cents. It's not rule. I'm not recommending shorts or anything. I don't short stocks outright because that's lunacy. I just want to bet against the meme with a finite amount of money. A simple put for December would be the way, and I'll stop myself out pretty quickly.